Imagine two people. One spends money chasing a lottery jackpot. The other invests that same money every month. Who do you think becomes wealthy? Every year, millions of people spend billions of dollars on lottery tickets, hoping that one lucky ticket will completely change their lives. The dream is exciting. A luxury home, financial freedom, never having to worry about money again. But instead of dreaming, let's look at the math, because numbers don't lie. The odds of winning many major lottery jackpots are roughly 1 in tens of millions. That's an incredibly small probability. Imagine filling an entire football stadium with people, then multiplying that crowd hundreds of times. Only one person wins. Now let's imagine something different. Instead of buying lottery tickets, you decide to invest that same money. Suppose you spend just $10 every week on lottery tickets. That's about $40 every month. Instead of buying tickets, you invest those $40 every month into a diversified investment portfolio. The first few years don't look exciting. Growth is slow. Many people would quit. But investing has something incredibly powerful working in its favor: compound growth. Think of it like a snowball rolling downhill. It becomes larger, not because you're pushing harder, but because time keeps helping it grow. Money earns returns. Then those returns begin earning their own returns. That's compound interest. That same $40 every month can eventually grow into hundreds of thousands of dollars over several decades. Now imagine investing $200 every month instead. Historically, assuming an average long-term return around 10% annually, $200 every month for 40 years could grow to more than $1 million. Notice the difference. The lottery depends almost entirely on luck. Investing depends primarily on consistency and time. So why do people keep buying lottery tickets? Because lotteries sell hope. Our brains love instant rewards. Winning tomorrow sounds much more exciting than growing wealth over 30 years. But real wealth is usually built the same way a tree grows. Slowly. Quietly. One day at a time. Let's meet two friends, Alex and Ben. Alex spends $50 on lottery tickets. Whereas Ben invests that same $50 into a diversified investment fund. Five years later, Alex is still hoping. Ben isn't rich yet either, but his money is quietly working for him every single day. "20 years pass. The gap begins getting much larger. "35 years later, Alex owns thousands of old lottery tickets, whereas Ben owns a substantial investment portfolio. Here's the lesson. Don't focus on what's possible. Focus on what's probable. Could you win the lottery? Yes. Is it likely? Not at all. Could long-term investing build significant wealth? History suggests the probability is much higher. although returns are never guaranteed. Time is one of the most valuable assets an investor can own. The earlier you begin, the harder your money works. Starting early often matters much more than investing huge amounts later. As Warren Buffett once said, the stock market is a device for transferring money from the impatient to the patient. Lottery tickets give you excitement for a day. Investing can give you financial freedom for life. Imagine retiring with confidence, helping your children, traveling, living life on your own terms. The next time you're about to buy a lottery ticket, ask yourself one simple question. Am I buying a dream, or am I building one? If you enjoyed this video, subscribe for more investing and personal finance content, where we let the numbers, not the hype, guide our decisions.